On this segment, what I would like to do is review the process of our members, basically, as they get their password in order to view the intelligence on the website. When you get your password, please go to the members area. You click on login, and this will take you to the section, the members area section, where you see on the right side, basically, 5 reports. It tells you to select your subscription. And one of the things that we do differently here in this room is basically that we prepare our subscribers for the following trading day by sending this information the night before or the week before. For day traders, we make a point of publishing the daily future stocks and ETFs by 7 o'clock Pacific Standard Time. Subscribers receive this report that basically gives you the algorithms for tomorrow's trading section. This report was published on the 22nd, basically, and it is for today's trading session. That it is April the 23rd. We're looking at basically Friday, April 24th. The prices basically are as of the close of 423. And you get this information so that you can apply this the following trading day, as we have in the room today. We post this daily algorithms, and we teach you and show you how we execute this algorithm in gold, silver, and also in other markets that we trade, which are derivative markets, like basically JNUG, Nugget, USLV, and USEO, which relate to basically the energy markets. USLV is for the silver. It's a inverse silver ETF. JDUST is an inverse silver ETF for gold mining shares. Nugget, it's an inverse ETF. And JNUG, it's an inverse ETF. These are aggressive instruments that we have found can be traded successfully, can be day traded as successfully as position or swing trading. And so we're taking advantage of these markets as we see the opportunity. We also publish a weekly report that is published every Saturday. And I want to take a look at this report currently because we have some potential trades that are being executed using this report on a swing trade, basically a swing trade signal that was produced last Saturday. And so let's take a look. This report was published April 17th, and for the gold, it was telling us that the June gold futures contract closed at 1204, basically. So let's go here for a minute and change this to the daily chart in gold, and we can see pretty much the daily action that we experienced since we published this report last Saturday. On the 17th, which is right here on this green bar, the market closed above the moving average of 1194, so it was bullish, and the weekly moving averages was indicating we had a bullish tendency. But it also told you that if the market was to close below the 9-day moving average of 1194, that the sentiment would turn, basically would negate to neutral from bullish. And as we came in on Monday, the market closed at 1195.80. It was still slightly bullish, but the following day, basically, which was on the 21st, it closed at 1192.50, and that basically negated this bullish trend, and it activated the code below, which is the 1199 as well, by closing below. So it closed below the 9-day moving average, and it closed below the pivot point for the week, which is 1199. and it activated basically the lower levels that essentially are indicating to you that based on using the price indicator that you look to take some profits on shorts into corrections at the buy one and buy two levels of 1189 to 1174. So the market came in on Monday, Tuesday, Wednesday. By Wednesday, it activated basically the buy one level of 1186, and the prior day we came down into that code of 1192, which coincides 1199 on the weekly, which coincides with the 1192 daily code that you see here. So what I'm trying to show you is the daily price action, how it identifies the entry points into the weekly signal. And today and yesterday we have, or for the past 3 days, we have been testing this buy one and buy two levels in gold between 1189 and 1174. And this signal basically, when it matches the daily algorithms as well as the weekly algorithms, it is a very high probability that more than likely we are experiencing some kind of a major level of support, major area of support. And what we want to see is the market come back above the on the close today to close above 1179. Closing above 1179 would trigger a buy signal, a weekly swing buy signal, which would activate the targets above 1186 and 1192. We will publish a report on Saturday that will give us the numbers for the following week, but based on these weekly numbers that were published last week, you were prepared coming into this week to identify the buy one and buy two levels where you want to accumulate long positions between 1186 and 1179. That is a very strong relationship between the daily and the weekly signals. Okay, so we're waiting for confirmation, more confirmation of this. A close above 1179 would validate the signal and would activate a buy long signal here on the close. The silver market, basically, let's take a look and look at the same report. Last Friday, the May silver futures contract closed at 1627, and with the market closing below the 9-day moving average of 1644, it was telling you that the momentum was bearish. But it also told you that a close above 1644 would activate basically the bearish short-term trend to neutral, and then if it was to close above 1644, it would activate an uptrend, a buy signal, a bullish signal. The weekly momentum indicator that we're using as the pivot point for the week, or the metrics for the week, is 1636. With the market closing below the VC weekly price momentum indicator of 1636, it confirms that the price momentum is bearish. But it also told you that if it closes above 1636, that this bearish signal would be negated. So we have two levels, 1636 and 1644, which are pivot points for us that will activate the uptrend. Now, by the fact that the market came down, obviously, below 1636 and 1644, it basically activated the lower levels of buy one and buy two, and it told you here to look to cover your short positions between 1619 and 1608. The market is trading at 1566, so it is extremely oversold, and if you were to bought these levels on the swing trade, your stop would be 1608. 1608 is the target on the B2 level, and the expectation that the market will move up towards that level and activate a buy signal. The market trading under the B2 of 1566.5 with a low today that was made at 1555, it clearly identifies for us a buy signal on the daily algorithm of 1561. And so, being that the weekly is extremely oversold, the daily is activating a buy signal at 1561. We want to buy this market and use the daily algorithm of 1555, or the daily low of 1555, as your stop, and go long at 1561, which we purchased earlier. We got filled at 1564.5. Our stop is 1561, and automatically the codes above becomes the targets. If you're day trading, the first level, the target is 1572. Second level is 1582, which is where we have our limit to sell for the day as a day trade. And the sell 1 and sell 2 level of 1603 to 1593. If we were to close above these levels of 1593 or 1603, it would begin to activate the bullishness of the signal from an oversold condition in silver. What this algorithm is telling us is the silver market is extremely oversold, and the highest probability trade right now is to buy this market in this blue zone between buy 1 and buy 2. And use both signals, obviously, as you can see, to measure the probability factor of the trade by trying to synchronize the specific price entry points. So let's review. The gold market closing above 1179 would activate a buy signal in the day trade and also on the weekly swing trades. A weekly close about 1561 would activate a day trade for silver and would also activate a swing trade with your stop at 1555. It's been defined by today's low. The targets above are 1582 to 1593. So we will publish the algorithms for the following week on Saturday. That's tomorrow. And we will email to all our subscribers. And if those guests that are interested in receiving the report, or anybody that would like to see what we do, please don't hesitate. Send us an email to support@ema2trade.com. That's support with the digit number 2. It's support@ema with the digit number 2 trade.com. That's support@ema2trade.com. Or you can call me at 805 area code 418-1744. Until next time, my friends, this is Patrick MontesDeOca, and once again, I thank you for the opportunity to spend this time with you and show you how you can apply this incredible tool called the VC Price Momentum Indicator to accomplish above-size returns in trading futures, stocks, ETFs, derivatives. Once again, until next week, my friends, good trading and be well.